Understanding adequate substance requirements for free zone persons in the UAE. For businesses operating within the UAE's free zones to benefit from the 0% corporate tax rate on qualifying income, they must satisfy certain adequate substance requirements. These requirements are essential for proving that a free zone person's core income-generating activities are genuinely conducted within the free zone, either by the free zone person itself or through outsourcing to an appropriate party within the free zone. Meeting these requirements confirms that a business is genuinely contributing to the local economy and not merely using the free zone for tax advantages. 1. Core income-generating activities, CIGs, within the free zone. To satisfy the substance requirements, a free zone person must conduct its core income-generating activities, CIGs, within the free zone. CIGs refer to the activities that are critical and central to a business's income generation. These may vary depending on the nature of the business but typically include functions that directly contribute to producing revenue. Free zone persons have the flexibility to conduct these activities either by themselves or through outsourcing to a related party or a third party situated within the same free zone. This flexibility allows businesses to utilize specialized services or expertise without compromising on their ability to meet substance requirements, as long as the outsourcing arrangement is thoroughly supervised and monitored. 2. Supervision over outsourced activities. If a qualifying free zone person chooses to outsource any of its CIGs, it must maintain adequate oversight and supervision over these outsourced activities. Supervision entails monitoring and managing the performance of the outsourced party, ensuring that the activities align with the free zone person's business goals and legal requirements. This requirement implies that the free zone person cannot take a passive approach to outsourced work. Instead, it must play an active role in overseeing how the tasks are performed. This level of control ensures that the CIGs remain an integral part of the free zone person's operations, even when handled by another entity within the free zone. 3. Demonstrating adequate resources, staff, assets, and operating expenditures. To satisfy substance requirements, a qualifying free zone person, or its outsourced service provider, must be able to demonstrate the availability of adequate staff, assets, and operating expenditures within the free zone. Here's how each of these components contributes to meeting the substance requirements. Adequate staff. This involves employing a sufficient number of qualified full-time employees to perform the core income-generating functions. Employees should have the necessary expertise and experience relevant to the business's operations. The number and qualifications of employees should align with the level and nature of the activities conducted by the free zone person. Adequate assets. The business must own or have access to the physical and intangible assets required to support its operations effectively. This could include office spaces, machinery, or intellectual property that is essential to generating income within the free zone. Having these assets physically located in the free zone underscores the business's operational presence. Adequate operating expenditures. The free zone person must incur a reasonable amount of operating expenditures within the free zone that reflect the scale of its activities. Operating expenditures could cover rent, salaries, utility costs, and other expenses necessary for maintaining the business's core activities within the free zone. The level of expenditure should be proportionate to the business size, scope, and income generation. 4. Case-by-case determination of adequate substance. Determining adequate substance is not a one-size-fits-all approach. It varies depending on the specific business model, activities, and operational scale of each free zone person. The UAE authorities adopt a case-by-case approach when evaluating whether a business meets adequate substance requirements, and they consider several test criteria and factors, such as number of qualified employees. The workforce size and expertise should align with the business's operations. For example, a manufacturing company might need a larger workforce with technical expertise, while a financial services firm might require fewer but highly specialized employees. Operating expenditure. The business's expenditures should be appropriate to its income level and operational requirements. Higher revenue-generating businesses are expected to have correspondingly higher expenditures that reflect their size and market involvement. Physical assets. Physical assets should support the nature of the business's activities. For instance, a logistics company would likely need warehousing facilities, while a service-based company may rely more on office space and equipment. Nature and level of activities. The complexity, size, and nature of the free zone person's activities are taken into account, particularly regarding how these relate to the qualifying income generated. The analysis considers whether the activities are substantial enough to warrant the income derived and if the business's setup is reasonable for the volume of revenue generated. Qualifying income. The income generated should be proportionate to the business activities. The free zone person should be able to show that the revenue earned is a direct result of the activities conducted within the free zone. Relevant facts and circumstances. Any additional factors that may influence the adequacy of substance, such as contractual relationships, intellectual property ownership, or special business models, will also be considered. This ensures that the business's operations are genuinely anchored in the free zone, rather than being an incidental setup. 5. Importance of compliance for free zone persons. Meeting the adequate substance requirements is essential for free zone persons who wish to benefit from the 0% corporate tax rate on qualifying income. By demonstrating adequate resources, supervision, and an active operational presence, businesses solidify their eligibility for preferential tax treatment. This requirement aligns with the UAE's broader aim of supporting businesses that contribute to the national economy while ensuring that free zone benefits are not misused by companies with only nominal or insignificant operations.